Good morning, afternoon, and greetings. I wanted to make a quick intra-week update on the previous video, which, of course, if you haven't watched, I will link it in the description. And yeah, to follow, to be able to follow what I'm pointing out in this video. I mentioned how I wanted to see the dollar reject from this sell side imbalance, this CB, and on Monday we opened and traded higher into it, refusing to close inside of it and then pushing lower. But at this point we still did not close below another swing low on the 4-hour chart, which is what I wanted to see. I wanted to see a strong enough displacement that we clear the NFP, I believe, NFP low. So Tuesday has opened now. At this point we traded higher, closed above this new day opening gap, price came down to it and used it as support for higher prices. So I'm still overall bearish on the dollar index, which makes me bullish on the indices and bullish on the foreign currencies. So for example, looking at this PDRA, this fair value gap in a form of a sell side imbalance, we can see it's technically been violated by the fact that we closed above it. Yes, it is a full closure above it, but I'm still looking at other PDRAs. I'm still looking at this other block, the last up close candle before the displacement down. So I'm looking at this as an order block as well, and the last PDRA would be this rejection block. The only reason I'm pointing out these three PDRAs is because those are the numbers of PDRAs that I want to see violated before I can consider a trade invalid. So 3 PDRAs away would be above this other block. So if you had a stop loss here, that should be fine. Of course, targeting not just Friday's low, but this swing low that we pointed out in the previous video. So this is the update that I have on the dollar. I'm still bearish, but actually while we're here, going down to the 1-hour chart, the only thing that would solidify my bias right now is the fact that today is Tuesday, and about 70% of the time the high or the low of the week is typically made on a Tuesday. So obviously looking at Monday's high, which is over here, following it to the right, we can see that we turtle souped Monday's high. So this could potentially be the high of the week right now on Tuesday. I'm saying this because it's 5 p.m. right now, so the market is about to close and I don't see a possible push higher beyond this point. But since we're here on the 1-hour chart, I wanted to point out this PDRA, this fair value gap in a form of a buy side imbalance. Let's delete this for now. This fair value gap here in a form of a buy side imbalance. Right now it's supporting higher prices. I would like to see a closure below this fair value gap, therefore making it an inversion fair value gap. So let's set a closure alert. So I'd like to see it do something like so, become an inversion by having a full closure below this, and then we could see a possible retest up into it and a continuation to the downside. So this is what I would like to see going into Wednesday on the dollar index, if we are going to remain bearish. Moving on to the currencies. Of course, I mentioned that I am leaning more towards buying GBP USD as opposed to Euro USD, and my reason is showing here again. Enabling this indicator, we can see Monday's price action there. It's written Monday, that's Friday. So this is Monday, this is Tuesday. The yellow line is the midnight price. We can see Monday's low, which is over there, was not swept today, being Tuesday. So Monday's low is over there, pull it out in time. Notice how we never swept it. And then moving to Euro USD, you can obviously see that Monday's low over there was swept. A full turtle soup was done on Monday's low. So liquidity was swept here while GBP USD wasn't. That's another SMT divergence on top of the one that we already had down here. So we refused to make a new low, indicating more bullish or more stronger pound as opposed to euro dollar. So I'm still looking for bullish prices here, and I know some people out there strictly trade the euro, so I'm going to quickly cover what my idea would be on the euro. It's basically the same that I have with the dollar index. I would like to see a closure above this inefficiency, this fair value gap here. Right now it is CB and it's causing price to stay below it. So if we can get a closure above this CB, it becomes an inversion, so we get something like so, and then a continuation to the upside. It would also be nice to get a market structure shift here, because I see there's a swing high right here. So if we pull this out and we get a closure above this high at some point here, after making this an inversion, this would be one of the higher probability trades for me, and I would probably even consider taking euro dollar myself. So yeah, that's what I'm looking for. My bias still remains the same. Then now going to the indices, we definitely cleared those relative equal highs I pointed out in the video. Keeping in mind my invalidation point was that swing low that I also pointed out, Friday's low being over there. We cleared those relative equal highs and we continued higher. Oh, this was from today's trade. I forgot to disable that, like so. And right now I am keeping an eye out on these highs, on December highs. Looking at them from the 1 hour chart, they just looked a bit too clean to me. They look too smooth for me to consider this to be a high. So that's where my next target is. Of course, right now internal buy side liquidity would be here, so let's highlight that. The only thing supporting this bias right now is the weakness that I have. I mean, the bias that I have for DXY, the dollar index. If I'm looking to get in weaker dollar, I'm obviously looking for stronger indices. So on this, I'm looking to see if we can clear that buy side and that buy side, internal and external buy side liquidity. So yeah, looking at the 9 hour chart, we already rejected from this fair value gap in the form of a buy side imbalance. So tomorrow I'm expecting a continuation without that much of a retracement. I get the feeling that we wouldn't really retrace going into tomorrow's trading. Again, tomorrow is just Wednesday. So yeah, on the daily chart, we officially just created a BC here where the inversion fair value gap is. So we have a fair value gap from this candlestick's high to this candlestick's low. Pull it out, we have that BC, and we also have this inversion. But I get the feeling that they're going to stay open. I guess you can call them a breakaway gap and continue higher, because this is a daily candle, right? So the next candle is going to print here. If we're going to drop lower, we're probably going to drop to the consequence encroachment of this tail, but even that feels too far deep. And then yeah, continuation to the upside. That's what I'm looking for on the Nasdaq, and the same applies to the indices. I'm also just realizing that we have a bullish order block there that we tapped onto. So yeah, I really don't think we're going to see much of a deeper retracement, but if we do, I'm going to just mark out this fair value gap. I'll look to see if we can come down into it. It's the only thing I can possibly think of, but I don't think we're going to come down here. I think we'll just continue higher from here. Anyway, E-mini S&P 500, same thing. We're targeting this high. We got this high cleared. I actually took this trade as well, there, and took partials here, and I took this on the E-mini S&P 500 on ESH, and then on the micro MESH I took a little bit more than this, obviously, and the target was this swing high, so I got tagged out on that swing high on the other ones. Anyway, same concept, same idea, looking for those smooth edges to be made clean, to be purged. On the daily, we also have this tiny 5 hourly gap there that will officially be created when the next candle opens up. But here we have a 5 hourly gap, a CB, that we closed above yesterday, and I get the feeling that with the way we are way up in the premium, we're probably going to use this as a support for higher prices, because I don't see us coming down all the way to this 5 hourly gap. But we'll see after Asia session has come and printed its data, then we will be able to use that to judge the direction of price. Yeah, I guess that's all I have. Oh, I guess, yeah, wanted to add gold to the mix. On gold, for our chart, we can clearly see that we are bearish. I'm targeting that swing low in this market maker sell model. Looking at how price has been rejecting from high time frame PDRAs, you can clearly see why I am bearish. We rejected from this other block, rejected from this 5 hourly gap even during NFP, and now we need to make a new low. So I'm looking on the 4-hour chart, and I see that we essentially purged Monday's high at this point on Tuesday. We possibly have the high of week already set in right now, and I'm looking to see if this tiny 5 hourly gap here, just over here, could be tapped into and then reject for lower prices. That's all I'm looking for on gold. And in validation point, I guess you could use this other block, but even putting it at Tuesday's high would be fine, because the idea would be that there's no reason to make a new high of week. So yeah, that's all I have on gold, and I believe I've covered everything else. For now, stay safe, good luck, and good trading.